you're watching Smart Investing Stockbusters at TFNFinancialNews.com. I'm your host, Sandy Franks. You'll be a bit surprised when I tell you the name of the company that my guest today says a perfect stockbuster. In case you're not familiar with what a stockbuster is, it's a company that is on the edge of sliding downward. And that means if it's a stock in your portfolio, you should sell it now. What stock am I talking about? It's a well-known brand name that has been around since 1958, John Deere & Company. The company is broken down into segments. One segment manufactures and distributes farm equipment, including tractors, cotton and sugarcane harvesters, sprayers, hay, and forage equipment. The other segment manufactures and distributes equipment products and service parts for commercial and residential uses, including tractors for lawn and garden and mowing equipment. The other two segments include the construction and forestry segment and the credit segment, which primarily finances sales and leases by John Deere dealers of new and used equipment. Why is John Deere a stockbuster? Well, let's turn to Andy Mickey, Senior Editor of Breakaway Investor and Small Cap Commodity Prospector, to find out. Andy, thank you for joining us.
Thanks for having me, Sandy.
Andy, what's got me puzzled is you're the guy who called for rising corn prices back in July when corn was around $2.50 a bushel. Now corn is at $4 a bushel, even wheat and barley at near all-time highs. Obviously, there's a lot of money floating around here, certainly enough for farmers to buy more equipment. So, to me, that would mean that John Deere fits right into the scenario, but you say John Deere is not a good investment now.
That's exactly right, Sandy, and Wall Street kind of has the same perspective that you do right now. But you see, the U.S. is a major contributor to the world food supply, and it is safe to call it the Saudi Arabia of food, because we're key supporters of Russia, or key exporters to Russia, Japan, and China, and really support their food supply. But Europe presents a problem where they do not accept our genetically modified organics. And that's where our key growth is going to come from, and that's what really supports the farmer when wealthy countries in Europe can't buy U.S. grains.
Andy, I would think as China becomes a major importer of corn, particularly for ethanol use, that U.S. farmers would benefit. In turn, that would benefit John Deere. In fact, in a recent Kiplinger letter article, an analyst with Prudential Securities says, quote, "The U.S. is in the Saudi Arabia of food. We're by far the biggest exporter the U.S. farmer is and the biggest beneficiary. What's good for the farmer is good for John Deere," end of quote. How do you counter that statement?
Well, again, Sandy, it comes down to the import and export equation, and it comes back to those GMOs where Europe refuses to accept them. You see, that's where we're getting most of our crop growth per acre. Right now, the average acre of corn planting gets about 150 bushels per acre, and over the next 25 years, due to the genetic modification of crops, we're going to see each acre of corn planting produce about 250 bushels per year. So we're going to see corn growth, but that's over a 25-year period, and which is going to help the world's food supply, but it's just not enough to make farmers very, very wealthy where they can just spend as much as they want to on new tractors.
Okay, I got you. And talking about money, let's talk about the financials of John Deere. Its income for the first quarter came in at about $239 million or $1.04 a share, compared with $236 million or 99 cents a share for the same period last year. Deere says that sales could be up slightly instead of flat, and that earnings could reach $1.4 billion for this year versus its previous forecast of $1.3 billion. This doesn't sound like a company in trouble to me.
Well, it's not exactly a company in trouble from that perspective, but it is a company that's not going to take off soon. We're seeing 5% growth in sales at best, and then 7% growth in earnings, again, at best, and that's with our highest hopes. And that doesn't justify the current run we've seen in Deere recently. Over the past 18 months, we've seen this stock go from 60 all the way up to 116 before pulling back now to around 105. And it just doesn't have the growth to justify that climb in stock price.
But wait a minute, Andy. Investors seem very happy with Deere's performance. Its stock rallied 11% in the 2 days after it announced its quarterly earnings. Could you be premature in calling this company a buster?
Exactly. Right after that earnings report, Goldman Sachs came out and said this stock's a buy. And here we are a few weeks later, and now we have the investment analyst community turning 180 on this stock. UBS just said it's time to sell. And the problem with Deere is it's not really a manufacturing company. Yes, they make tractors and lawnmowers and stuff, but that's not where most of their profits come from.
Where do most of those profits come from?
Well, you see, Deere is more like a bank than a manufacturer, where it generates most of its revenues. In fact, 89% of its revenues came from sale of equipment. It generates most of its profits from financing the sales of those equipments, and it generated 55% of its profits from only 11% of its credit revenues.
Well, in your opinion, Andy, what problem or obstacle would Deere have to overcome, and secondly, can they do it?
Well, the big obstacle they're facing is farmers having a lot more money. And if farmers have a lot more money and they do decide to buy a new tractor, they're not going to need to pay the financing charges that Deere is using to pad their profits. It's just simple economics, and that's what Deere needs to justify that high stock price. And with corn at $4, wheat, barley at new highs, soybeans climbing, farmers are doing very well. And if they do make the choice to buy new tractors and equipment, they'll just buy them directly from John Deere. And Deere only makes 2.3% profit on direct sales without that financing leverage.
So, Andy, what are you suggesting viewers do if they have John Deere in their portfolio? Is it time to sell the stock? Do they hold on to it?
Well, I know a lot of farmers, and they love to hold Deere. And so if you're not looking to sell it, you should at least buy put options to protect yourself on the downside. Because realistically, although Deere's trading between 105 and 110 now, we're looking at a $70 to $80 stock by the end of the year. And to buy put options, you should buy them at a ratio of about 1 option for every 50 shares owned. Currently in Level 6 Trader, we have a speculative put position, which is up about 40%, and we're expecting to see more as Deere continues to fall, as Wall Street catches on to where Deere's actually generating their profits from, and how truly high risk this company is right now.
Well, you know, I have to tell you, Andy, though your argument is sound about John Deere being a high-risk company, we're going to have to keep an eye on this one. After all, John Deere is a well-known brand. It's been around forever, so we're going to follow you on this one. We appreciate your being here with us and sharing the information.
Glad to be here.
If you'd like to hear more about Andy's views on John Deere or other stocks he follows, you can sign up for his free daily email, Fair and Greed. Information is available right here at TaipanFinancialNews.com. That's it for now. I'm Sandy Franks. I'll see you again next week. Until then, keep your portfolio safe.
Welcome to TaipanFinancialNews.com. I'm J. Christoph Amberger. I'd feel amiss if I didn't point out to you that Andrew Mickey is not only bearish on John Deere, but predicts a hyperbull in a very specific strategic material that already is in short supply. He's written a free special report on this freewheeling commodity stock speculation that I urge you to read right now. Simply click anywhere on the screen or cut and paste the URL we provide in the text next to your viewer into your browser. I think it's one of the most compelling stories I've read in a while. But you tell me what you think about it.